Good morning, everybody. I hope everyone's having a great day. I hope everyone's trying to survive this. I'm about to go to an Algorand conference in Miami. I'm flying out in about 2 hours, and I just wanted to make a quick video while I'm getting ready. So, what's happening with the entire market right now? Why is everything red? Besides for inflation rates, which I do think are getting an inflection point. What exactly is an inflection point? An inflection point is a height, a peak of that inflation. Last month, when it came out, the data for March, it was 8.5%. Now we currently have 8.3%. We were expecting 8.1%. However, if 8.5 was the peak and we go down, if we get another 1 or 2 or 3 reports, so if we get the report for May, June, and July, and it's actually going down to south 8%, then I do believe that the Federal Reserve is not going to be as hawkish, and they're going to start becoming a little bit more dovish. As per Jerome Powell even says when we see some evidence that inflation is starting to curb, we're not going to stop raising interest rates. However, we will not raise them as aggressive. So instead of 50 basis points, it's going to be 25 basis points. When that time comes, a lot of stocks are going to go up, a lot of people are going to prosper, and a lot of things are going to start bulling back up. Okay, bear markets and bull markets. Bear markets last approximately 1 year, with a bull market lasting, except for one time, at least double as long as the bear market. The problem is it also takes several years for that bull market on average to recover from the low points of the bear market or the peak of the bear market. So the only way that you can counterbalance this is actually DCAing the dip, dollar cost averaging the dip as things are going down. If you do that and you don't run out of funds, you're good. Let's talk a little bit about running out of funds. What's happening right now? There are a lot of people getting margin called. What exactly is margin? If you invest, let's say, $1,000 into the stock market, whatever brokerage you use, whether it's M1 Finance, Robinhood, TD, anything you use, Chase, they allow you to borrow against that. So if you deposit $1,000, they will let you borrow probably 50% or more of that $1,000. I think they let me borrow 70% if I'm not mistaken. So you have $1,000, but now you have $1,500 of buying power. And what they're going to say is, we will give you this as long as you have 70% value in your account. So if you're taking the $1,000 and you're borrowing $500, that's $1,500. And they're going to say, as long as you have 70% of the $1,500, you're going to be fine. And 70% is around, what, 700 and 350. So about $1,050 of the $1,500 that you have plus borrowed. If that doesn't happen, you get margin called. Margin called means that you need to cover your position. So you either A, have to come up with the cash somewhere, and if you don't have the cash, you have to B, sell out of your positions. The thing is, if you're margin called, let's say you have that $1,500 and you're margin called for $50, in order to fix the margin call and you deposit funds, you only need to deposit $50, and then you can actually borrow another 50% on the $50. So that $50 that fixes your margin also gets you $25 to borrow. If you don't have liquidity and you don't have funds and you get margin called, you have to sell your positions. Selling your positions is like time and a half. So to cover a $50 margin with positions, you actually need to sell the actual $50 worth of position, plus the difference between the maintenance amount. Remember, you need to maintain 70%. So you're actually going to have to sell not $50 worth, but probably going to have to sell like $75 worth. You see, it's the inverse of the margin. Margin lets you borrow against, but selling out of your position reduces the amount of margin that you're allowed to have because your positions are now less. It's a very interesting thing that's happening. And I believe this is happening to a lot of retail investors, a lot of people that didn't plan for this. I told you guys a long time ago, around 6 months ago, that I was always worried about getting margin called, so I hedged my bets. What exactly is hedging your bets? Hedging your bets means that you have lines or you have assets to deploy in case you get margin called. I have large lines of margin, and I got margin called for very small amounts, maybe 30 grand of positions I had to sell, which is a very small number when I had a 7-figure portfolio, which is not the case anymore. It's in the 6 figures. So I was smart enough to plan for this. But if I didn't plan for this and I had to sell out of my positions, which is happening to so many people right now, I was not going to be able to cover, and that means when there is a bull run, I'm not going to prosper from the bull run, because if I have to sell my positions to cover my margin calls, that means that I'm out of position less in position, right? I had 100 shares, now I have 80 shares, for example, because 20 shares had to cover up margin. Well, when there is a bull run, I'm not going to prosper from that bull run, and it really, really sucks. And that's kind of what's happening right now, guys. The market is going to recover. The bull runs do recover. They come back. I just don't know when they're going to recover. I don't know if it's going to be a day, a month, a year, so on and so forth. I think this is going to last till the end of this year, but not past this year. In 2023, I believe it's going to be clean sailing, and I think everything's going to be back to normal. That's my own personal opinion. I have no idea if this holds true, but you have to invest with a hypothesis. You have to invest with action, and you have to invest with a reason and a passion. If you're investing blindly, you're going to lose. You could only get lucky once or twice, right? You can't win the lotto every time. And you're definitely going to go broke if you don't know how to plan for the future. Because if you're failing to plan, then you're planning to fail. Thank you so much. Have a great day. Easy training. I'm going to see you guys from Miami. Peace.